It's the media stocks that have slipped 2% lower in trade. This also has to do with Zee Entertainment earnings and the reaction there that has come in. PSU banks have slipped 1.5%. Real estate is down by over 1%. Pharma, auto, that's also dragged quite a bit. You can see even the mid and the small cap spaces which are down, and the infra IT names that are also dragging in trade as of now. Let me look at the top movers on the Nifty. Eternal has continued on its top spot right from the word go on the D Street today. Now over a 10% uptick, holding at about 300 odd levels. HDFC Life has pulled up now. Titan Company is also doing well at this point. We're also looking at Hindalco, Maruti, HUL. ICICI Bank is among the top movers. On the downside, Shriram Finance, that's lower. Adani Ports is also cracking by 2%. Jio Financial Services, Eicher Motors, these are the pockets that are still holding lower in trade. In the F&O space, apart from Eternal, there's Info Edge that's also pulled up 4% higher. Of course, buoyed by Zomato's earnings. And that's pulled up the stock because it has a substantial stake in Eternal as well. Angel One, Havells, 197 Communication, these are all the stocks that are also moving up in trade as of now. When we look at the stocks within the F&O that are dragging, 361 WAM, Aarti Industries, IRFC, Granules, Samvardhan Motherson. These are the top drags at this point. Let me welcome our guest on board. Mr. Kranti Patini joins in. He's the Director of Research at Wealthman Securities. Mr. Patini, warm welcome. Good to have you with us. Well, first up, what do you make of the market momentum which continues on a very choppy trajectory? What would you advise investors at this point?
Yes, actually, the consolidation phase of the market has been continuing. But one positive thing for the market in the medium to short term is Nifty could able to decisively hold the range of 25,000 for Nifty, which is a sentimental and a strong support zone. It could able to sustain this level of 25,000. So as long as the Nifty is above 25,000 level, the medium to short term market trajectory is in a positive trajectory. Just market has been waiting for some kind of a positive news. It can come in terms of the earnings. That's where some kind of a lukewarm response the market is getting, and also the global uncertainty like the trade deal and all that has been creating some kind of a limbo on the markets. So market has been in a consolidation phase. This phase might continue till the time we get some outcome about the trade deal, the US is concerned. And with respect to the large cap earnings are concerned, we have witnessed some kind of a positive earnings from the banking and financial services. But the remaining earnings of the company from the large cap space has been not enticing the market at this point of time. That was the key reason for this kind of a lukewarm and a consolidation phase is going on in the market at this point of time. But what we can sense, as you rightly mentioned, the stock specific actions still remain going in the market. Sectoral rotation and the leadership rotation is missing in this market at this point of time.
Yes. Let's talk about those specific stock moves, Mr. Patini, and try to understand your view on those. Eternal, Zomato that started off its rally yesterday after the earnings, a 7% move yesterday, another 11% move today, and record high levels also being seen in the trade session today as well. Now, this is despite mixed set of earnings that have come in. Overall profitability has dipped by 90% year on year, but still the stock has actually moved up in trade, probably buoyed by Blinkit's narrowing of losses and revenues superseding food delivery revenues as well. And so far, after the record high levels have been seen, Eternal has now topped 3 lakh crore rupees of a market cap. That's higher than at least 20 of the Nifty companies as well, including the likes of Wipro and Tata Motors. So help us understand, when a retail investor looks at a Zomato, which is a new age stock completely, and none of us who are in the urban setup of the living and are used to of ordering so frequently from these apps of either e-commerce, quick commerce or food delivery, how does one really understand we have been seeing in the recent past how the valuation picture came in. 300 zones have always proved to be critical for Zomato. It's always faced resistance to go beyond this. Now the stock has again moved up. We've seen some earnings celebrations come in. How does one really understand Zomato, the way it's going forward, vis-a-vis some of the other companies that are superseded in market cap now?
Sakshi, if you have to interpret these kind of business models with conventional wisdom, uh, one would miss the opportunity in these kind of business models. These are all new age businesses, and right now the focus of these business models is capturing the market cap and bringing the consumers to use their platforms. It can be in terms of the quick service, or it can in terms of the e-commerce business is concerned, the food delivery business is concerned. That's where these business models are getting habituated to people at this point of time. Of course, the urban Indians are completely utilizing the services, the platforms are concerned, whereas the tier two and tier one cities, the semi-urban, also getting into the these kind of platforms, food delivery businesses, and the quick commerce, just sitting at the home and getting the things in front of you within a span of less than, by the time you take off your car from the parking and going to the merchandise, to the vendor, by the time getting the things at your doorstep is completely changing the perspective of the way one can do the shopping. That's where the Zomatos and the Swiggies and the quick commerce kind of businesses are taking the penetration of their business and occupying the paramount stage of the consumer behavior. That's where these companies are could able to get the edge of the customers. Coming to the financials, once the stock get listed on stock exchanges, market always look for the profitability. Yes, as you rightly mentioned, the revenues went up, but the profitability taken a toll. This is what the conventional wisdom tend to fail to give the targets for these kind of stocks. And look at the way the saga of different broking companies and research houses, how upgraded the Zomato target prices are concerned, about 300. That's where the buying interest is coming. Coming back to their business models, these business models are have ample opportunity. They have the leverages in terms of the technological leverage, and their variable costs have been coming under control at this point of time, and the operational leverages. That's where the Zomato and these kind of technology based food delivery business or quick commerce grocery delivery businesses are concerned. That's where they're taking the edge at this point of time, Sakshi. If the investors, and we have a duopoly, okay, that's where the advantage. There are not too many players, and nobody want to enter into these businesses at a immediate basis. So that's where the Zomato is taking the advantage. Most probably, if the company could able to knock the profitability at a sustained profitability in the coming quarters, that's where the edge these companies are going to enjoy because of their market share, and also as the disposable Indians incomes of Indians is going to go up. These kind of business models, these are the proxies for a young nation. That's where Zomato is taking the advantage.
Sure. Mr. Patini, some more earnings that have just come in. Let's talk about Zee Entertainment Enterprises that came out with its earnings just now, and it reported a 22% uptick year-on-year growth in its consolidated net profit that has now come in at 144 odd crore rupees vis-a-vis 118 crores in the same period last year. Revenues from operations, however, have declined by 14 odd percent to 1825 odd crores from 2130 odd crore rupees. So that's a dip from the previous year. Now, of course, PAT or the profit after tax is attributable to the shareholders declining 24%, sequentially. That's something that we can keep in mind of as well. Revenues have also seen a sequential 16% drop as well at this point in time. Segment wise, if you look at the difference, the drop in overall revenue was actually triggered by a significant both year on year and sequential drop in revenue from other sales and services segment. Advertisement revenue, the company earned 758 crores. Again, that's a dip from last quarter and first quarter of FY25. Subscription revenue, there is in fact some dip, slight dip again on both accounts, and other sales and services have also come in sharply lower at 85 odd crore rupees vis-a-vis 360 crores in last quarter and 232 crores in the first quarter of FY25. Now, Mr. Patini, for Zee Entertainment, we've actually seen, troublesome periods also. Although the stock has actually recovered quite a bit from the last 3 months, it's up by 17 odd percent. But if we look at the kind of decline that we are seeing today after the earnings, it's again substantial, 5.5% lower in trade. How would you look at the stock after some volatile moves have been seen, troublesome period has been seen, so much of uncertainty that shareholders have faced?
Yes, actually, there was a lot of euphoria around the stock, but everything
recording stopped
at this point of time. The results are not enticing at this point of time, and also the overhang about the management. These are the key speed breakers for Zee Entertainment. There are some better companies and better stocks are available at this point of time, even though the valuation seems to be attractive. But given the kind of looming uncertainty with respect to the management and all, I try to stay away from Zee Entertainment at this point of time.
Okay, that's the one that Mr. Patini is staying away from at this point. We'll definitely keep that in focus. Apart from this, I also wanted to get a sense on one of the pockets, Mr. Patini, and that's the cement stocks. What is fueling the recent rally in cement stocks? They're all up by over up to 8% in trade today. The rally started a couple of days ago with large caps moving in first, and now it's the mid caps names that are also moving in higher. What's the sense that you're getting? India Cement, Dalmia Bharat Cement, Deccan, you're looking at KCP, Ramco, all of these names, Saurashtra, many of these mid-cap names, they have been in momentum. What would you say is happening in the cement basket? Is there a fresh wave of momentum that one should look at now?
Sakshi, the cement stocks, what we witnessed is, in terms of the business models are concerned, what we witnessed a complete consolidation with respect to the companies' businesses are concerned, both in south and north as well. And these stocks have been in a consolidation phase in the past 4-5 quarters. Now what we are seeing is some kind of a money, because of the valuations looks attractive, and also as we are in the middle of the monsoon at this point of time, as the capex has been going up, both in terms of the private capex, in terms of the public is concerned, public sector capex has been going up. Infrastructure theme has been emerging quite strongly. So that's where some kind of a buying interest and cherry picking is taking place with respect to the cement stocks are concerned, cement companies are concerned. So if the investor is really a long-term investor with a horizon of more than 2-3 years, definitely we can see value in the large cap cement stocks and who are have the good market share in terms of their business models are concerned.
Okay, fair point. Well, thank you so much, Mr. Patini, for being with us on the program and helping us with all your views on the markets and various pockets that we've discussed. Hope to see you soon on another edition on Business Today Television very soon. Thank you so much.
Thank you.
Thank you. All right.